I think rates are going to be held steady for most of 2017. And I actually think that the next move in interest rates we have will in fact be upward. Nicki Hutley, Urbis. The Australian economy saw the sharpest contraction in last quarter's GDP growth since 2008. This figure was a shock to the market, as despite a declining mining industry, growth has remained surprisingly resilient. Do you think Q4 figures will show growth and Australia will avoid a technical recession?
Look, yes, I do think Q4 figures will look a lot healthier. Whilst we were all expecting a fairly weak GDP figure for the third quarter, that weakness was expected to show, just the economy stayed still rather than shrank. But there were some special factors. Weather was among them, which held up building and construction. There was also some temporary disruptions on the export side. So if you look, though, at the underlying figures, and there was also a one-off with public sector transfer of assets. So there were quite a few special factors in there that made the number look lower than it probably is. And you would think on balance that given the partial data that we would actually be getting a better fourth quarter. We've also in the last two quarters had a turnaround in the terms of trade, and that's hugely important for Australia's economic well-being. That's something that's been dragging down incomes and seeing poorer outcomes for growth and incomes as a whole. So having that stronger tailwind from the terms of trade is a really good thing. We've also got good employment. Consumers are moving ahead modestly. Still got more way to go in the construction sector. So the only missing piece really is around the investment outside of the mining sector. And whilst that's a worry, it's not enough to push the economy over into a technical or an actual recession.
Some analysts are now expecting the RBA to cut its cash rate to 1% in 2017 because of growth figures. However, when the RBA held rates in December, before the GDP data was released, policymakers said they expected slowing growth at the end of 2016 before it picks up again. Taking this into account, what is your prediction for the RBA's future moves?
I think rates are going to be held steady for most of 2017, and I actually think that the next move in interest rates we have will in fact be upwards, barring any external shocks to the Australian economy. There is a lot of momentum that's coming through, and whilst the Reserve Bank doesn't want to prod house prices to go in the wrong direction, they are also aware that there is quite a bit of momentum in the economy, and that we do have the fundamental indicators for the Australian economy don't warrant further interest rate cuts. In fact, some people are arguing that the current interest rate stance is probably too lax. And in fact, that's what's fueled, the property price boom that we've had. So there's a range of views there. I don't believe, as I said, that interest rates cut is warranted in 2017. And yes, if anything, I'd be looking for the next change to be up. But that said, not any time soon.
And Nicki, the NAB Business Confidence Index rose to 5 in November, beating the expected decline to 3. On the other hand, the Westpac Consumer Confidence Index for Australia dropped 3.9% in December, the lowest reading since April this year. Where does your sentiment on the Australian economy sit looking forward?
Look, I'm looking for the Australian economy to have another year in 2017, probably much like the average of 2016, and that is that we've got a reasonable level of growth somewhere around the sort of 2.5% level. It's not really strong, and Australians don't like it when growth isn't really strong. We still haven't really adjusted to this new lower level of growth. It's interesting that businesses remain quite confident and that they are taking on more labour, but they're not. That's not translating into much stronger investment outside of the mining sector, and that's a worry. On the other hand, whilst consumers say, particularly in the latest numbers, are quite worried, and a lot of that was on the back of that weak GDP number, and some of the reporting, particularly in the media, that were we on the verge of a recession? I think that's not necessarily translated into lower spending, and I think whilst people do worry about their futures and a lot of the big picture issues, still fundamentally it doesn't feel like an economy that's in recession out there. We don't see very high levels of unemployment. We do see continued employment in growth in employment and also in wages. And overall, there is a relatively healthy aspect. And, we are still one of the strongest growing economies in the world. So we're doing pretty well all up.
Thank you for joining us, Nicki. That's all for our analysis on the Australian economy. But for everything else, stay with us here on Dukascopy TV.